All right. Good afternoon or good morning, everyone. Welcome. I've got a really big attendance today, so it's really good to see. So, one of the things I always love to do when we start these sort of sessions, I love to know where everyone's actually joining from. So, just while we kick off and while people are still joining, can you please just put in the chat where you're actually joining the session from? If you're joining from Australia, let me know which city. Brilliant. Sydney. Melbourne. If you're joining from overseas, also let me know which city as well. Always love to know which international are joining. Dubai, fantastic. More Dubai. Melbourne, fantastic. Perth. Sometimes they claim that they're another country. Just joking. Singapore, fantastic. Melbourne. Another Singapore, great. All right, definitely got an international audience tonight or this afternoon. Musselbrook, fantastic. All right, so firstly, I just want to welcome everyone to the session. As you guys know, I love doing these sessions, and I haven't really been doing that many sort of in 2025. But as you sort of get to the end of the year, you start thinking about sort of 2026 and the year ahead. And we've sort of done a lot of sort of work on this as we sort of shape up for next year as well. And, some of you may have seen our recent announcement with MTB Connect. And I actually did a similar session like this, but specifically for the life sciences space. So this one, that was so well received. I wanted to do something that was in alignment with what we sort of, as far as what the sort of core, I suppose, companies that we're working with, whether it be sort of innovative technical businesses or the sort of fund managers that we're working with. I want to provide basically some insights as to things I'm observing and the conversations I'm having on a day-to-day, with founders and with fund managers about their own sort of capital raise. And by the way, absolutely insane. We've got over 100 people sort of on this session, which blows my mind. But it just goes to show that's probably because I haven't done one for quite some time. So just as we sort of get into this, I want to play a short video and I want to give you a bit of a sneak peek into, our Emergence sort of 2026 conference. Emergence is the biggest thing that we do each year. And, we're targeting to attract 1,000 attendees across 3 days next year. And I really, from a private markets perspective, this is the biggest event, in the space. So to kick off tonight's session, I'm going to play a quick video.
Emergence was born out of the idea of actually placing a spotlight on the innovation ecosystem. Across the next 2 days, we'll have anywhere between 750 to 1,000 attendees, 50 to 60 companies that are going to be presenting their opportunities to you. We've got 40 keynotes and panelists throughout the next 2 days. We have absolutely stacked these 2 days to make sure you get as much value as possible.
I think this year kind of standing out from the scale, the audience, the speakers.
I'm quite surprised by the breadth of types of companies and investors that have come on.
I've met a number of people already. It's certainly a good turnout.
The vibe is good and the setup is great. I was really very, very impressed with what I saw the minute I walked in.
We have absolutely stacked these 2 days to make sure you get as much value as possible. You're going to get access and you're going to see some incredible presentations from some amazing CEOs, fund managers, and founders behind the business that are presenting.
Emergence, how they developed in the last 7-8 years. It's kind of represents, the current local ecosystem, investment community. I think that's very important. It's great event.
Well, it's the first time I've come to this conference. I have to be honest, I didn't really know what to expect. So it's quite a unique event in that sense that it's catering for, the really, really long-term investors, the really short-term kind of crypto investors, or even the high-risk investors like people that want to invest in startups.
Steve and the team always put on a really eclectic mix of businesses and investment options for wholesale investors in market. So it's been a positive one thus far.
This is the first time I've been at the Emergence conference. A lot of people who are inquisitive, which is great. So I've had a number of discussions, and the quality of these discussions is sort of borne out by the follow-ups. That a lot of people take my details, and I've taken details of a lot of people. The app's been helpful for that.
We want you to walk away from this event with 3 outcomes. We want you to basically experience high-value networking. We wanted to help shape your own investment thesis about how you're thinking about markets and your own investing, and then getting access to opportunities that you don't normally get access to in the normal day-to-day.
The minute I walked in, the registration was painless. The way the event was laid out, the exhibitions, the demos, and not to mention the great coffee, the great food. So I had a great time, and the panel was exceptional. It was a great time of sharing, and I hope everyone benefited from the panel.
Thank you, the Wholesale Investor family, for everything they've done to give us this opportunity. You've done a great job.
We've done everything to make sure it's a seamless experience for you. The final point from me is this, and I say this every single year, and it happens every single year. The power of one conversation in Emergence is absolutely everything. You will meet someone here today that will be an important relationship for you in 5 years' time, and you would have absolutely forgotten that you met them here, but don't worry, I will remind you.
So that was a bit of an insight into what we did last year. So a couple of things we're going to cover today. I'm going to talk about sort of private capital raising landscape in 2025, and then also expectations for 2026. We're talking about sort of raising capital from high net worth and family office investors as a specific focus. I think that's really important because there is a lot of content online about sort of raising from VCs, but very little about raising from high net worth and family offices. And we're taking you through our sort of 4-step fundraising process that we sort of, encourage and educate on and sort of guide companies through. And to give you a bit of a sort of visual as far as what Capital HQ looks like in action. I know many of you may have seen it before, may have heard us talk about it, etc. But to give you a quick insight as to what that looks like. Then I'll be sort of going through the Emergence Investor Program. We've done something a bit different this year in that normally, I suppose the way in which we sort of work with companies, we have a typical sort of subscription, and we sort of do things, when sort of companies sort of come to us. This year, everything we want to do everything pre-planned and effectively spend most of the time of what we're doing promoting, featuring, exposing, etc., and giving insights into the companies that we're going to be featuring at the conference, rather than curating up until the last day. So that was, so I hope that sort of gives you a bit of an idea. I just noticed another name's picked up, and then also how to participate in that. So the funding gap is really obvious. Obviously there's lots of great companies, there's lots of great fund managers, but the path to capital raising is fundamentally broken. And it's mostly because there's this lack of awareness or education around how to build a systematic engagement process for actually, working with or engaging investors or, potential fund managers, in an opportunity that actually maintains momentum in the process. So for me, I really identify this as one of the biggest opportunities for founders to focus on in how they think about their capital raising going forward. I said every single day, I get people reaching out saying, hey, we're closing our capital raise in 3 weeks. What can you do for us? I was like, rarely does someone ever reach out 6 months in advance and say, hey, we've got a 6-month deadline on our capital raise. What's the process we can run to actually maximize our capital raising opportunity? And it's an important question because I'll go back to one of the most important things in my own journey was my own capital raising experience. And it was going back to sort of 2019. I'd actually been promoting companies' capital raisings for 10 years, but I was going to do a raise of my own. And I realized that I knew how to promote companies for their raise, but I'd never actually run an entire process by myself. And I made this massive mistake. And I reached out to a shareholder of ours, and they basically said to me that, what I should do is I should launch the raise and have a really quick turnaround time. And when I say quick turnaround time, put a deadline on within 2 weeks. So I followed their advice because I thought, well, they're an investor into my company. They know how to do, they raise capital all the time. They know how to do it. And what I realized was basically when I took that advice, and then so I started doing it, and effectively all I heard was too soon, too soon, too soon, too soon, too soon. And I completely killed my capital raising. And then it was like, you have to sort of go back with your, tail between your legs and sort of redo your raise out to the people you've just told that you're going to be closing within 2 weeks. And I realized at that point in time, at that time, I realized that was not the right advice, firstly. Secondly, I went to another sort of, advisor, board member at the time, and I just asked them a question, and this is a skilled, sort of investment banking team. I go, have you guys ever run a capital raising process from start to finish within a 3-month time frame? And I just watched him, he just looks up and to the left, and he just goes, no. And I was like, okay. And this, by the way, this is the most honest investment banker I've ever met in my life. And so that's when I realized that effectively I need to actually learn the art and science of this actual process. So to me, part of what I'm doing with this awareness is obviously I'm going to talk to you about what we're doing, some of our activities, but also to give you insights into how to actually think about your own process for raising capital next year. And then likely you can go to work on it over the next couple of months. Said as we sort of get towards sort of Christmas and so forth, I know a lot of people do their planning and strategic initiatives around that time. So that was my part. Now, the reality is that the market has shifted from a capital raising perspective. So if you think about how it used to be sort of pre-2022, effectively companies would raise early capital from high net worths and family offices, right? Then they would leverage, or some may even get it from VCs. Then they'll leverage a combination of the R&D rebates or commercialization programs or grants, etc., and that would help them extend that money further. Then obviously what they would look to do is they would often look to list on the ASX, and the ASX at the time was positioned as listed venture capital, right? And then they would go about raising more capital, building their profile as they go through their various stages. And the reality is for most Australian companies, I know most are Australian on here, for the people coming in from Singapore and Dubai, maybe not Dubai, you don't have that issue too much, but I know Singaporean companies, you're often raising capital from international sources as well. Effectively, you have to go offshore at some time. For Australia, in an Australian context, there is no great Australian success story that has been able to do it with just capital from Australia alone. So international travel is a core part of who we are and what we do, as Australians building businesses. And then sort of end of 2022, 2023, the ASX started to tighten their criteria. And what that meant was that there was fewer IPOs and also there was some M&A, regulatory stuff that come in at the same time. So effectively what it meant was that high net worth, family offices, VCs, all fund managers are in this, have basically got capital trapped inside of companies because of there's fewer IPOs, fewer exits, etc. And with the capital trapped, it means they're unable to realize gains. Well, if they're unable to realize gains, it means that they can't recycle it back into the next round of opportunities that they're looking to invest into. So if you've noticed, there's been an absolute boom in government grants and all sorts of different alternative sorts of capital, whether it be debt financing, etc. It's just been pretty much every company I speak to has been doing a combination of getting access to grant funding, doing convertible notes, or looking to get access to debt funding to basically see themselves through their own various capital raisings over the last few years. The challenge for most of us now is that, at the state and federal level, from a budget perspective, they're under pressure. So my expectation in the next 12 to 24 months is that it's highly likely that some of these government grants and some of these funding programs are going to start to be wound back or pulled back. We've already seen it in New South Wales in regards to the Sydney Startup Hub, where they just let it lapse, right? Because the state government budget's under pressure. And there's all sorts of other examples around this as well. But you're definitely seeing it in Victoria, some of the challenges they're having. So, then, for me, I think it's an important thing to understand this context. From a fund manager's perspective, there's been obviously a boom in the private credit market, and effectively there's been a massive rise, so private credit's gone to 200 billion, and it's expected to go to 400 billion over the next few years, right? There's obviously intense competition from domestic players and also international players as well. So now, that means that there's more competition coming in for capital, but likewise at the same time, due to the high profile media coverage from the AFR, and by the way, I did say this like literally 12 months last year, because I thought to myself, well, the AFR has been single-handedly, putting the fire, helping create the sort of interest in private credit, but media has a great job of, it's got to build things up to then tear them down. And you sort of then saw the widespread coverage of any issues in it whatsoever. And then obviously then asset comes in and then away it goes. But the reality is there's still such strong demand from investors to get access to high yield opportunities. But it's important to note that that is the landscape, that there is significantly increased competition. You know, I know we worked with a provider of sort of funds management licensing, and at one of our events, and they had like 40 plus inquiries across 2 days, to give you an idea how many new sort of potential fund managers are coming on the scene at the moment. But fundamentally, you know, as much as I can, you know, I do talk about some of the negatives in the market setup, but the reality is I think right now is absolutely a generational opportunity for all of us as either founders or fund managers or anyone building a business whatsoever. Because number one, AI and automation. I'm literally hosting an AI summit this Friday. But what it means is it allows us to create, you know, incredible amounts of productivity and capital efficiency inside of our businesses. And if you're only just sort of starting to test the waters with AI, my biggest, strongest suggestion to you is to go absolutely all in. Because effectively, the longer you wait, the wider the gap is going to be as far as between those that are actually all in on it and where you're going to be. And the ones that are all in on it are going to get the biggest advantage from it. It's actually one of my biggest regrets when it comes to crypto, is that even though I was fascinated in it, I didn't go all in to the extent I would have, because I probably would have, you know, been more active on the investment side than what I did. Even though I still participated, I probably would have done it earlier. And I said, because I did work with crypto companies from the early, but when it came to AI, I said to myself, I was not going to make that mistake. So the other one is the globalization of capital. I said, you see that on this information session, but more importantly, like for me, I've got shareholders from 9 different countries, right? And I remember from, you know, getting shareholders from France, from Vietnam, from, you know, Singapore, from Hong Kong, etc. Really sort of gives you a bit of an idea about that capital is more sort of global these days. And then obviously the rise of access to alternative assets. Private markets has been the biggest buzzword over the last couple of years outside of private credit. And fundamentally, investors do want to get access to high growth, and high yield opportunities. I said, but they've got to be explained, they've got to be articulated in the right way. But I said, I genuinely believe this is I think for the majority of us on this actual call, we have the opportunity to make more money in the next 5 years than what we've made in the last 20, right? So, you know, I encourage everyone to go all in on these different factors. So the capital raising reality, and then sort of my philosophy, the reality is that most of us experience is that companies do struggle to access investors. You know, when we did surveys on this, it was like 54%. Mentioned this as the biggest issue. There's a massive amount of time lost in the capital raising process. And then fundraising is a distraction. You know, I said I had my own example in 2019. I remember I spent sort of 3 to 4 months all in on capital raising. And then when I looked at our revenue in that period, it had almost declined the amount at which I'd actually raised capital. So it would have almost been better just continuing doing what I was doing. But this is one of the hard parts. And, you know, one of the benefits for me as a product builder is that I got to build something which made sense from, and what I learned from my own process of raising money. So, and the other thing I'd strongly, highlight is that bottom line. In 16 years of building Wholesale Investor, I can count on one hand the number of people who have actually said that they enjoy capital raising. And even one who told me that they enjoy capital raising, when it come time to raise capital for their company, they literally palmed it off to someone else in their business, right? Capital raising, the easiest way to put it, it's like doing online dating, putting your profile out there, and then getting, and if you put it out to 100 people, getting 97 rejections of people telling you why you're ugly, why they're not interested in you, why what you're doing is not, you know, in alignment, telling you their thoughts about what you need to do, and then also ghosting you at the same time, right? So that's the experience of raising money. So the real challenge, you know, most people will come and they often just think about what they need to do is they just need to get, I'm getting smiley faces through the chat. They just need, they said the real challenge is not just to get more investors, right? the challenge for most companies is they go through this process where they raise money from networks that are associated with them, where it's people actually in their own, people that have known for 5-10 years, done business with, worked with, or whatever it may be, or, getting referrals from, and then they move into a network that is completely unknown to them, right? And effectively, all of a sudden that dynamic changes in the relationship. And so the biggest thing I encourage is it's not a single transaction. It's a process of building trust and sustained engagement. And to me, this is really the foundation for the new rules about how to think about your capital raising in 2026. So investors will fund solutions, right? For the innovators, investors fund solutions to problems that they understand personally. This is why, when I do my capital raising masterclass, I take people through what my first meeting with a potential investor is. And one of the questions I ask is what do you understand about the problem I'm solving, right? Because effectively people do invest into the human side, of the behind human side, the story behind the actual technology. But if you can extract from an investor, if they understand, basically the problem that you're solving, it's a much greater foundation for the conversation going forward. So typically the lesson I'll give you is a single pitch rarely ever works, right? It only typically happens if they're close networks to you. They need to basically feel and see a narrative unfold over time. Now, for a lot of people, you can get frustrated by that, thinking, well, I'm raising money now. I don't want to give them time to see the narrative unfold because I need money now. But this is the dance of capital raising. So when presenting to, if you're a technical business, when you're presenting to high net worth and family office investors, even if they understand your space, less technical, more human. For me, I remember I spent a lunch, I spent 2 hours over a lunch breaking down all these technical product details about what we're doing to an investor who was looking to put in $500,000. At the end of it, he said, great lunch. Absolutely love your enthusiasm for your product. I just want to let you know why I won't be investing. And that was a heartbreaking 500K lesson for me. That one line that I just highlighted there. So, said less technical, more human, more focused on what is that vision that you're actually building. And for the technical founders, if you get to the point where you're saying, if they don't understand the technical side, I'm not going to explain it to them, you've basically lost the battle. Your job and our jobs as founders is to basically help people understand our business in the shortest, simplest, most efficient time possible so that they can, in their minds, go, that's interesting, right? That's effectively what you're going for when you sort of explain that. So then it really, I suppose, begs the question is, what is actual capital raising? And the reality is it's just a marketing and sales process. Now, a lot of people don't like to admit that, but it really is. And the only difference is the product that you're actually selling is your business and the shares in your business, right? Or the units in your fund. That is the actual product. But ultimately, capital raising is just a marketing and sales process. So then the core principles which we sort of educate founders and fund managers on is, again, fund managers are actually quite good at this, to be fair. Get ready, stay ready, always be raising, and then get to a yes or no as soon as possible, right? Now, when you get to a yes or no as soon as possible, if it's a no, that doesn't mean that you cast the investor out and never speak to them again. It just means that they go on your investor distribution list to receive updates going forward. Now, to give you my pain in that sort of principle of and by the way, everything I'm sharing as part of this is from all the mistakes that I have made. This is not because I'm amazing at raising capital. This is because I've just made so many mistakes, and it was more I had in my mind that I want to help other people learn from my mistakes. And obviously I've been able to raise, I've raised 8 million for my own business, right? So I've been able to raise capital for my business, but I've made thousands of mistakes along the way. But getting ready, when Investec first approached Wholesale Investor about investing, they asked for a business plan and I didn't have one, right? Because I wasn't ready. I wasn't raising money at the time. They'd approached us when I wasn't ready. So get ready is number one. Stay ready. The reason I say that is because once you get ready, the time it actually takes to stay ready is a lot less than if you have to get ready again. So it's much easier keeping things up to date than it is doing everything from start to finish. always being raising and engaging. So that means always being actively communicating with investors about who you are, what you're doing. There's a couple of different benefits to this. Is that number one, you always get that helicopter view of what investors are thinking about, what they're looking at, what they think is actually, investable, etc. But secondly, you can get some good feedback about your own business in that process that you can sort of adopt or ignore, right? So, and then get to the fastest yes or no possible. I won't do it in this because it sort of doesn't work in a sort of webinar format. But when I ask people, what's the fastest yes or no they've received, right? Effectively, you get all sorts of ranges. Like for me, people have said they've had their fastest yes within an hour, right up to, could have been sort of like a couple months of their fastest yes. But sometimes when I ask what's your longest drawn out no, some are like it's still going, 18 months, 12 months, etc. There's no, just to be clear, there's no set rules when it comes to capital raising for rejection or acceptance. Every investor is different, and it's such a wildly different experience for everyone. So the solution, the system, and this is where, I said, I designed what we've built from a product perspective with both CapitalHQ and Wholesale Investor because of the frustrations. Previously, we would just promote opportunities of raising capital. When I started to go all in on this myself, then we started to actually redesign what we provide as a company to be aligned with this. And so when I'm showing this to you, you'll start to understand exactly how you can actually either do it for your own process or why what we do could actually be relevant for you. So firstly, I'll just mention that I am going to talk about sort of our upcoming Emergence conference. And as I said, I wanted to do something different this year in that, basically I wanted to make it an investor program in the sense that it's not just about first a company presenting at our event and then us doing stuff afterwards. I basically wanted to make it a sort of 2 to 3 month promotional profiling, investor building exercise in the lead up to the event, with the event actually being the culmination of it, right? Which is, I said, typically we would have companies come out to, reach out to us, a few days before the event saying, is there any presentation spots available? This year, I said, we want to set it up right so that effectively companies have, as far as the highest, I suppose, interest that they can when they actually present. So look, we've got a 4-stage capital engagement system, and notice how I didn't call it capital raising, capital engagement system, right? The first part is profiling. So whenever you're going out to raise capital, the first thing you need to do is you actually need to build your profile. So that's the process of you going from unknown to known. Right. And, that's the first bit. So, the way we do that from our side, we do things like CEO interviews, we do things like articles, we do social media posts, we do promotions about upcoming companies that are going to be featuring at the conference, we do announcement emails, etc. We do all these different sort of communication points to help with that sort of profiling part of the actual process. Then the next stage for us is the promotional process, where effectively you build awareness about what you're doing. The next stage is the promotion to actually generate interest from investors that actually register interest in your opportunity. The next stage is then an actual presentation. That's typically at our conference. So at our Emergence conference, for example, I said we'll expect anywhere between 750 to 1,000, even potentially 1,000 plus investors at that. Plus, we expect to have a couple thousand actually end up watching our live stream that we'll be doing for the event as well. And then the final stage is actually the publishing part. And this is where you announce your significant milestones that you've achieved. So we're always articulating that when you go to raise capital, you need to be endlessly communicating the social proof elements that are relevant to investors. So that is your team's been there, done that experience. Investors that may have previously invested into your company beforehand. If you've got any trial partnerships with blue chip companies or blue chip research institutions or universities or hospitals or whatever it may be, highlighting that, as part of it. If you've got customers, blue chip, if you're a B2B business, you've got blue chip customers, be highlighting that. If you're a B2C business, business to consumer business, you've got to be showing off what do your growth metrics look like, because that's your social proof, is basically people buying your product, right? So these are the things you want to be profiling, promoting, presenting, and then also publishing in your sort of ongoing announcement. But for us, we've built this into our 4-stage sort of capital engagement system that we encourage companies to work with when they sort of work with us. And obviously we've built it into our actual product. So one of the sort of, I suppose, lessons to learn is to learn about the sort of law of mere exposure effect. It's something that social media has done really well, right? And this principle and this law is something you've got to think about for your own capital raise. Sometimes it feels like we're putting out content to no one, or we may feel like we're getting no engagement, or we may feel like, people aren't sort of seeing what we're doing. And then there's all of a sudden this trigger where it feels like everything's coming to you all at once, and you're like, you don't know where it's been all this time. And this is the power of mere exposure effect, is people tend to develop a preference for things simply because they are familiar with them through repeated exposure. And the more often you encounter, a stimulus, whether it be around a person, a brand, a company, an idea, etc., the more likely you are to trust it. And this is what the whole foundation of the principle of the capital engagement system is. The mere exposure effect, in marketing, they used to teach you that, someone needs to see or connect with your brand at least 7 times before they start to like, trust, etc. And now, because of social media, they believe that's gone up to sort of 15 plus, right? And who knows, it could be more now. But this is one of the principles that we all need to learn as founders or fund managers that are building our business, is that when someone makes a decision on what you're doing, their process is that they become aware about you, then they considered you, and then they made a decision about you, right? People forget about that consideration part. This is where the mere exposure effect becomes super important in the capital raising part, because they've had multiple touch points with your business. And if it's through announcements, publishing what you're doing, you've been at different conferences, event, them meeting you in boardroom sessions, them joining information sessions, them getting your online updates, all of a sudden you can see how people can have multiple touch points with you as you're going through your capital raising process, right? So the why behind Capital HQ, well, really, Capital HQ, it all come out of my own frustration, right? In 2019, I remember being at an event, and I remember just feeling like, it's like capital raising is like that super emotional roller coaster ride where when someone says no to you, you feel like an absolute failure, and you're like wondering why you're tipping your life into this business, and are you wasting your time and all that sort of stuff. And then when someone says yes, you feel like you're bulletproof, right? So you go through this massively emotional journey. And I realized that as I was going through my own challenges, problems, frustrations, etc., I realized that all I could see in startup media or in media when it came to capital raising was how to create a great pitch deck, how to create a pitch deck that VCs like, how to approach VCs. But for me, I realized very early on that effectively VCs really represented, and I did some stats on this at a recent event, VCs invest in 1 in 100 companies they see, and then they'll follow and invest in likely between 1 to 2 in 10. The reality is, if you think about the 100 plus people that are on this, that means that the reality is only 1 or 2 of you will raise money from VCs, right? The rest of you will raise money likely from high net worths or family offices if you raise money. But there wasn't really any education around that or helping people sort of understand what that feels like or is like to go through that experience. So that's where I started to build Capital HQ to basically solve that actual problem. So the way I see Capital HQ is, for me, it's my command center for raising capital. So inside of it, I knew that there was 3 frustration points that companies had when they went to raise capital. Number 1, they wanted to access investors, right? So we actually made that as part of it. We made it so that investors could see the most relevant deals for them, and that, effectively companies could see the most relevant investors for them. Now, the mistake I made initially was that we built it so that investors could see the most relevant companies. But of course, investors aren't as proactive as what companies will be when it comes to raising money, right? Companies are the ones that proactively go out and seek. Investors sort of almost sort of respond to things which they see which could be of interest, and typically it's either a referral from someone or a deal they come across, an email they receive, or something they think's interesting, etc. It's more of a reactive response. So that's when we sort of did the second way. And then the second part was streamlining the engagement, right? So that's where we started building intelligent deal rooms, where it made it real, where you, instead of just actually seeing documents as to what a typical data room would provide, it was more they could engage with it. They could actually go deeper into your frequently asked questions. They could see your documents. They could actually look at all the various news publishings that you've done over the last few months to actually see your progress. And what the important part about that was, between news publishing, the investor relations, was I found that in my own journey, I went from spending 4 to 6 hours with every investor and basically being, and I had a mentor called the chief repeating officer, to actually them spending that time with my room, right? Or as much or as little time as they wanted with. And then that way my conversations was more relational and answering things which wasn't covered in my room. So it ended up saving me a massive amount of time in going through the capital raising process. So the streamlined engagement, it's actually beneficial for them as well, because it means that they can do their looking at you at 10 p.m. at night when you probably don't want to talk to them, right? They can do their things at the end of the day. And once again, this is all about how can you help people do what they're going to do, without sort of, creating friction in the process. And then the last one was the providing of intelligence. So doing those three things of enabling investor access, basically streamlining, simplifying the process, and then also providing intelligence so you could get awareness about what an investor's doing and get insights about what they're likely, how active they are in your room or not, is a massive difference. So, what I'll do is I'm just going to do a short demo. All right. So I hope that sort of gives you a bit of an insight as to what the actual product looks like, and to give you a bit of an idea about sort of who we've worked with. So in the life science and medical device companies, we've worked with all sorts of companies across life sciences and medical device. Got some great success stories in there. Like I said, Cubotics, I've been on an incredible, sort of been on the journey with them from when they were actually raising sort of 2 million sort of post the sort of GFC, right up to sort of when they were raising 50 million from TDM as part of it. Some of these, I remember I went to an Opal shareholder lunch one time and pretty much I knew everyone in the room, as an example. And we actually had a recent great success story with a company called Cardiobionics, or actually called CardioLife now, where effectively it was one shareholder of mine from Australia that met another shareholder of mine from Vietnam. And effectively they met the company in Singapore, and now the company's now gone on to raise 25 million with the help of my two shareholders. So it gives you an idea of the strange, network or ecosystem that sort of can be created. In the renewable energy and the sustainability space, we've also worked with some incredible companies. NRN, we worked with them from their seed stage. They got their first customers from us. They had some of their first advisors come from us, first syndicate leaders, investors, etc., all sort of from our network in the early days. And they had said that announcement recently of them raising 57 million. So happy for Alan and the team to be actually doing that. But likewise, plenty of success stories. And also Rex Energy was another one. Their first deal that they did was actually their first commercial deal. I think it was in a video, he mentioned it was like a $15 million deal, something significant, where it was their first commercial partner that come on board. And if you're not in the life science or healthcare or in the renewable energy, we worked with every different type of company from every different stage. So to give you a bit of an idea, whether it be from crypto to advanced manufacturing, to AI, to you name it, we've worked with it. And then for the funds, we've worked with every different type of fund at all sorts of different stages, whether it be new fund managers or fund managers, multi-billion dollars, or family offices that are actually, building out their own funds, etc. Said we've worked with every single different type, or VC funds, PE funds, private credit funds, corporate credit funds. And that's just the beautiful thing about our ecosystem and the private market ecosystem about what we've built with Wholesale Investor. So, to give you a bit of a background as to why, we've been able to do what we do. But here's some actual real stories from some of our clients.
All of this year has been full-time fundraising for me. It definitely takes a lot more time than I thought it would. I think the main hurdle is finding the right profile of investor for our opportunity.
How many conversations you had before getting your first investment?
Around 250.
During your race, you have to be confident that you keep that momentum going.
It's very difficult when you're trying to build a company and trying to cap raise at the same time.
The hardest thing in founding a business is raising the capital. For a business like ours, capital is oxygen. I think any founder needs to be prepared to grind. It's not an easy job.
Will we still be alive when we do finally get an investor?
How to sort the people who are really intending to invest from the people who are just kicking tires.
If you launch a cap raise and you're not prepared, then it will take you much longer, but you'll also turn off a lot of investors along the way.
We really use the platform a lot to screen people and to help us to find the investors that could make a real difference for us.
It mitigated a lot of time investment, allowed us to focus a lot on the business, and we had a great team behind us helping us.
You're a platform, an ecosystem, an integrated network we all know enables to speak to so many people around the world that we would not be able to do otherwise.
Gave us, I suppose, that discipline of getting the information out there. So, really good categories, that centralized platform that we could keep on top of all our documents. It also gave the potential investors the ability to look at the information in their own time. Having one source of truth for information for investors, you could see who had looked at your platform. It sort of prompted you to follow up.
So we've only been with Wholesale Investor about 6 months now. We've raised $3 million through the platform.
We use Wholesale Investor's platform to raise our seed round. We raised about $1.3 million.
In fact, our US JV partner came indirectly through Wholesale Investor. We've raised somewhere between 20 to 30 million.
We just signed an agreement about a month ago for a $7.5 million project in Queensland.
One actually came through Wholesale Investor, was an introduction, and they're coming on board, and they're rolling out hundreds of sites that will have solar and battery.
Fantastic. We've raised $3.5 million in equity to be able to build the foundations in the organisation.
As of the 1st of December, I'm now contracted as the Managing Director of an ASX listed company.
I feel really lucky because I think Wholesale Investor for me has listened. They've not only listened, but they've delivered and brought not only investment partners, but actually is the ability to be seen and you have extra exposure.
We came seeking finance, but we're going to leave probably doubling or tripling the size of our app by incorporating other people's tech and other ideas and things and collaborating together, which is something we were not expecting.
Did the seed raise on the Wholesale Investor platform to start our global expansion. And we'll be back to Wholesale Investor to raise our next round on theirs.
So it's not just about investment. This platform has just opened up such a massive amount of global opportunity for Rex Energy.
I hope that sort of provides some insights from both sort of types of companies we work with and then also sort of what our sort of clients have experienced. Now, of course, they are the ultimate ones that raise the money. Our role is very small in that it's really about doing our best to provide an introduction, but there's lots of work that needs to go into that. So we do things like, if part of what we've designed as part of that, the profiling, the promotion, the presentation, and then also the publishing. is one of us a produced live, professionally produced CEO interview. So you can actually tell the story behind the business. It's actually one of the best comments I had from one of our clients who ended up having a strategic family office come into their business. Was that they said what they used the deal room most for was it allowed them to tell the story about their business to investors rather than just, here's our documents, here's our P&L, here's our documents, here's our pitch deck. And so things like the professionally produced CEO interview make are a key in actually doing that. And then likewise, we basically create an article on your business as part of this program as well. You've probably seen, what I was speaking with Andrew today. It's fantastic to see the success of him, and he's a listed company. And obviously listed companies are also doing investor profiling as well. But, we've seen them in the last 2 years, they've watched their share price go up nearly sort of 200-300% as they've gone through their various regulatory approvals, with it. But, I said it's still the same job for a CEO of a listed company, for a CEO for a listed company, is all about that sort of profiling, promotion, publishing of their announcements, etc., because they're also trying to stay top of mind with investors who could be interested in what they're doing. That's why it's a surprise to me that founders think that capital raising is a process of sending out pitch decks and waiting for money to come back in. When you have a look at CEOs of listed companies and you realize that they are geared machines on actually doing this over and over. So one of the other parts of the program is we're actually going to be doing a capital raising masterclass. So effectively, it's going to be covering every single part of what you need to go through in this actual process, right? As I said, for me, I wanted to make this an Emergence investor program. And part of that is actually setting the framework as far as how to actually run your own sort of capital engagement process. And I suppose do it from start to finish, where there is deadlines in place. You are moving people to a close. When do you actually set up those deadlines? What are some of the mistakes that people make, etc.? And then what is a process to manage engaging investors that doesn't chew up a lot of your time? Like, people think capital raising still takes a lot of time. If you do it right, it will not take up as much time as what you think it will. And that's why I do my best to go through in the capital raising masterclass. And of course, the culmination of it is the opportunity to present your business at the Emergence conference in 2026. It's going to be held on Feb 19th and 20th. So the video you saw at the start is the exact venue that we're going to be hosting the event. It's actually going to be a 3-day conference this year, but the first day, Feb 18th, is actually going to be dedicated to life sciences. We've actually sold out that first day already, which is going to be amazing. In fact, I've spent the last 3 weeks chatting with some incredible life science and medical device companies. I could not be more bullish about Australian innovation going forward. There's some incredible biotechs and incredible medical device companies coming down the pipeline. Now I want to do the exact same thing with day 2 and day 3. So I said life science is day 1, and then day 2 is effectively calling Emergence. And effectively, for me, every company gets the opportunity to present for 8 minutes. Plus, you actually get a tray table where investors can actually come and speak to you about what you're actually doing, and that's an important part. Because effectively, everyone wants to try and do everything online, but the actual truth is, when it comes to handing over, 50, 100, 250K, $1 million, $5 million, as sort of saw in some of those, in person is a massive, massive opportunity. And that's where a lot of it gets done, because people want to meet people face to face and look in your eyes. The other reality is it's a great opportunity, not just for investment, but also commercial and strategic opportunities, as you also saw from the video as well. So, that's the sort of key. That's where it all culminates in that. But then after the conference, there's a great opportunity to keep that momentum going. So we've obviously built an investor network of over 45,000 across the last sort of 16 years. So you can continue sort of providing updates, profiling what you're doing, CEO interviews, etc., and also accessing our investor network as part of it. And then there's also opportunities to participate in follow-on events across Asia, Middle East, etc. We're about to announce, or actually this is pretty much the announcements or launch of Emergence 2026. We're also going to be doing Emergence Dubai at the end of March as well. So we're going to be doing that as a 2-day conference. I was so pumped after our Dubai event this year that effectively we decided to make it 2 days, and we are going to basically, we want to take an entire sort of delegation of companies, investors, etc., over to Dubai for that event. Is the best way to explain it, if you've been in this industry for long enough, Dubai is what Singapore and London was in 2014. It's just an absolute hub of ambitious energy and innovation. And what I was really surprised about is a lot of the European fund managers that we knew had actually now spent half their time in the Middle East, and then half their time, mostly this European summer, of course. But that's pretty much how they sort of spend their time now. So that's also part of the program. There's some examples of Trevor, who you saw in that video, and then Victoria, one of my favorites, sort of raised 10 million through us, and obviously been a lot more. We've done secondaries for them. We've done all sorts of stuff for them in that actual time. I'm putting up this example. This was actually a story that we did quite a while ago from 4DX. 4DX actually become our most recent company to become a unicorn. This was after we actually helped them raise that sort of first 4 million of their raise. And I remember I spoke to Andreas just before he was about to list. I think it was in mid 2020. And he said that the money that he got from our network was some of the most capital that he appreciated at that time, because of how hard it was to raise capital sort of in the early days. But he approached us when they were just simply a seed company spinning out of Monash University and looking to commercialize what they're doing. But this was an announcement we did that they're now a unicorn. So, absolutely beautiful to see them go on that journey. Other examples that I mentioned before, we've seen Palace Capital raise over 30 million from our networks. Likewise, DIT have raised a significant amount as well. So it just it helps you understand the power of structured engagement, consistency, and the power of being consistent in presenting what you're doing to investors, and also engaging them in your opportunity as well. I said sometimes it's random how it sort of comes about. I've had investors come on recently where I'd never spoken to them. In fact, my last Brisbane event, I met a shareholder for the first time that's actually been a shareholder for 2 years, right? So it's always such an unusual spot. So now I'm going to break down for you the Emergence Investor Program just in the last sort of couple minutes. So we've designed this in that there's going to be a special offer, in that effectively what we're going to be doing is basically, we're going to be providing you normally we only provide 12 months access to Capital HQ as part of it. But for this special offer, we're actually going to give you 24 months access to Capital HQ. So this can cover the current raise that you're doing, and likely also the next raise as well. That also includes access to our investor ecosystem. This also includes access to my capital raising masterclass that I'm going to be doing, and I'll give you the timings for everything shortly. You'll be featured in our online investor showcase, our preview online, which is going to be hosted at the end of January. And once again, this is about my structured process in doing massive profiling for all the companies participating in Emergence over the next 2 to 3 months, right? And you'll get the opportunity, and this is only for the first 20 companies, you'll get the opportunity to present on day one of Emergence. Obviously, day one of the Emergence sort of the Life Science Investor Day is already sort of sold out, but you'll get the opportunity to present on day one of Emergence. You'll get a professionally produced CEO interview. Also, you get publishing and distribution of your significant announcements to our networks for the next 12 months. I said Mark from DIT, funny enough, it was actually an announcement that he did about one of his milestones. It was one of the big triggers for one of his most significant investments. And, so the publishing of announcements, no different to how listed companies do it when they announce big milestones, makes a significant difference in your capital raising. And so the whole focus for us is how we can create multiple engagement and touch points in your actual capital raising process. So this Emergence special price, it's $9,750. And that comes with, as I said, 24 months access to Capital HQ, which is normally $5,000 a year itself, just as a standalone. It's only available for the first 20 companies that are looking to participate, because with that, you also get to participate on the sort of first day of Emergence, which is on the 19th of February. Following that, we're actually going to be, we actually haven't had a price increase in what we do for the last sort of 5 years. So now we actually need to, for a range of different reasons. But effectively, after those first 20 are done, we're going to be increasing the price to $11,750 for what we do, for what's actually in that program. And effectively it'll be for only 12 months. So there won't be the additional 12 months of Capital HQ that will come with it. And if I can tell you, we're basically doing a whole bunch of development now on the sort of Capital HQ platform. There's some really, really cool AI related stuff coming down the pipeline. And if you know how much I love AI, you can probably get a feel for one of the things. And everything I'm thinking about is investor access and streamlining and simplifying the capital raising process. So effectively, that's only available for the first 20 companies. If you're interested in presenting, or if you're interested in participating in the actual process, I'll show you what the next steps are. Now, of course, the reality check is that capital raising has no guarantees, and we state that clearly. Effectively, what we can control is the access to investors part, the professional presentation of what you're doing, the systematic engagement, and the ongoing platform access, right? But capital raising is complex, it is unique, and there is no guaranteed outcomes. What you control, and this is the most important part because people want to ask me questions, but what you control is effectively the quality of your opportunity, the strength of your team, the timing, effectively when you sort of try and time from a market perspective, and then the engagement and the follow-up interest. As I said, the people that are just sending out pitch decks waiting for stuff to happen, I said those days are long, long, long gone, right? So the follow-through on investor interest is a super important part of that actual process, right? But by leveraging both the resources and the support, as well as maintaining control of the key aspects of your business, they're going to be the key things that increase your success. So, effectively, if you'd like to learn more about how you can secure your place as part of our special Emergence investor program, I'm going to provide you with a QR code shortly. Then we'll have a discussion with the WI team sort of about your business. I said we are curating for this, and I'll explain, in the curation part, we're looking for teams been there, done that experience. Ideally, if you've invested a significant amount into your company yourself, or you've raised capital previously, that is ideal. Also, if you've received government grants of some kind as well for the technical businesses, that's also of interest to us. If you've got trial partnerships with significant groups, or you've got customers that are, if you're a B2B business, you've got brand name customers, that's also relevant as well. And then likewise, if you've just got a good growth trajectory, right, then we're interested in change. So they're the types of things that we're actually curating for as part of this. So if approved, right, to participate, then the onboarding process begins. The WI team will assist you with the onboarding. And then, as I mentioned, we've got basically, due to the limits on, I said, this is specifically for the 19th of February. As I said, day one is already sold out. This is specifically for the 19th of February. There's got 20 spaces available for this special offer, right? So, and if you're an Australian or New Zealand company and it's been entities around for longer than 12 months, then you also got the capacity for potential to get access to our payment plan across 4 or 6 months. But there is that is through our third-party provider, right? So there is payment plans available for Australian or New Zealand companies that would like to participate, which you can handle, you can ask questions about that. So effectively, as a recap of what's actually included, 24 months access to the program, professionally produced CEO interview, participation in our online showcase, email, social media promotion. You get a dedicated trade booth for the day that you're presenting at our conference. You get a presentation on the main stage at Emergence on February 19th. And also you get access to my capital raising masterclass as well. So these are the actual timelines for everything. I think I've missed one second. See if I missed oh no. The timeline. So the actual timelines for everything, just to give you a bit of an idea. So so basically we're going to start the onboarding of participating companies over the next couple of weeks. We've already started the CEO interviews for the life science and medical device companies that are participating. We're likely to start the actual CEO interviews for basically companies that are participating as part of the Emergence Investor Program on November 21st. Right, so effectively, just under 2 weeks, just over 2 weeks from now. We'll be doing the capital raising masterclass on December 17th. I'm doing that at that time because I know some of you will want to go to work on, either your pitch deck, your material, your positioning, etc. Typically when you have a break over the sort of Christmas, New Year's Eve period. And then January 30th, we have our first online preview online showcase, which we're making available to our global investor ecosystem. And then Feb 19th and 20th, we have our Emergence conference. So that's the basic timelines for everything. So if you'd like to participate in the program, in the Emergence sort of investor program, then all you need to do is you can clearly just pull out your phone, you can scan the QR code, right? When you actually scan the QR code, effectively it will take you to a registration of interest form. Simply complete the form. You'll receive an email inviting you to have that sort of initial discussion with myself. Right? I said, as you know, I'm part of the sort of curation, and there's a whole sort of specific things, as I mentioned, that that basically I'll ask you about in regards to your business. And then we can, and if you have any questions about what we're doing in the program as well, that's also your opportunity to ask about those questions. So simply scan the QR code and said you'll be taken to that form. You can complete that form. And then what I'll do is I'll just leave that up here, and I'll give the opportunity to, if anyone wants to ask any questions, happy to go through them. It's something that's good. Itchy eye. So if you've got any questions, feel free to put it through in the chat, and then I'll go through them one by one while you scan that. Thanks, Tommy. Appreciate your feedback. Someone's asked, am I going to share this demo? I'm actually going to be sharing this entire recording. So following today, tomorrow, I'll actually send out an email. I'll include effectively, these next steps, how you can actually register interest in the program. It will take us probably a day or so to do the video. So then I'll share actually the slides and also the video recording of this session as well, if you'd like to sort of go through it another time or show it to a team member or whatever it may be, etc. If anyone's got any questions, feel free to ask. And likewise, as I said, if you don't have any questions, but you'd like to learn more about the program or like to understand what's involved in it, etc., just feel free to scan the QR code. I said you will receive an email from me, and we'll set up a time to actually have a discussion about your business. And then obviously, I'll have questions for you about it. And then likewise, if you have questions for me about the program, happy to take you through that as well. Is there any industry restrictions? Now, that's always a question. No real, basically, for me, industry, there is some industries that we haven't worked with in the past, but it's definitely on a case-by-case basis. So if you're in something which is highly sensitive, then, I would recommend just register interest, and then we can have that discussion, or send me some information and I can give you my sort of immediate feedback. Thanks, John. Good to have you on the call. Thanks, Peter. Appreciate that. Thanks, Elizabeth. By the way, appreciate the nice comments from everyone as you're sort of sending this through. And always good to see repeat people coming onto my sessions, even though some may have been on a couple of weeks ago. Mate, glad everyone enjoyed the session. I know in this session, I did provide more information about sort of what we're doing and about what our products are, but I said the principles are the same. If you just take the principles from this session, I said you'll be amazed about the difference it'll make in your own psychology and how you think about your raise. Even just the psychology of it's a marketing and sales process. It reduces your sensitivities towards no's, because you realize that just because it's a marketing and sales, it's ultimately a numbers game. And effectively, we've all got to get better at that numbers game. So, that's always the hard part for us to sort of be desensitized to. And I suppose everything we're doing is just trying to improve the amount of numbers or improve the amount of people that you get access to. And to give you an idea, in the course of a campaign, we expect companies to receive anywhere between 25 to 70 registrations of interest. And then it's over to you to basically convert those investors. All right. Thanks, Peter. Appreciate that. All right. Looks like there's no questions. I do appreciate the feedback from everyone. Okay, someone's got I don't know why someone's bothered doing an anonymous. Australian start with a great solution. As with all starts, we're cash resource short. Given this, so as I said, so people, if you're typically, we obviously work with companies that are going through cash challenges, because that's, you're not raising capital because you're absolutely swimming with cash and you don't need it. So we do utilize a third-party provider that helps spread the payments across 6 months, right? So that can assist you in going through this process and obviously, you know, being a part of Emergence and all the lead in promotion, etc., you know, whilst you're actually raising the capital. So that's how you can actually do that. And do we have it? No, we do not work on success fee at all, and we never will. So I should just literally put that on our website as a starting point, right? We are specifically a subscription-based business, and there's a reason for that. And that is, you know, so what we do is global in nature, right? And effectively it'd be too complex for us to try and get licensing in every single country that we go to with our business. So hope that's helpful. All right, everyone, I'm going to wrap it up here. I really appreciate the feedback from everyone. I'm glad you enjoyed the session. As I said, I will send out a next step as far as how you can participate in the program. Likewise, I'll also send up a follow-up email, which will have the recording from this session and also the slides from it as well, so you can have access to it. Ladies and gentlemen, enjoy your morning, afternoon, and evening. Have a great day.